Every 4 years, something monumental happens in the world of cryptocurrency. A single event that has the power to shake the markets, excite investors, and redefine the value of Bitcoin. This is Bitcoin Halving, one of the most important events in the history of digital money. Today, we'll break it down simply, clearly, and visually, so by the end of this video, you'll know exactly what Bitcoin halving is, why it matters, and how it affects the price, the miners, and the future of cryptocurrency. Let's start with the basics. Bitcoin halving is an event built into Bitcoin's code. It happens automatically about every 4 years, or after every 210,000 blocks are mined on the blockchain. When this happens, the reward that miners earn for creating a new block is cut in half. That's right, the word halving literally means the mining reward is split by 2. When Bitcoin first launched in 2009, miners received 50 Bitcoins per block. After the first halving in 2012, that dropped to 25. In 2016, it became 12.5, and in 2020, it was reduced to 6.25 Bitcoins per block. The latest halving happened in 2024, which reduced it again to just 3.125 Bitcoins per block. So why did Bitcoin's creator, Satoshi Nakamoto, design it this way? The goal was to make Bitcoin scarce, similar to gold. Every halving slows down the rate at which new Bitcoins enter circulation, helping to control inflation and ensure that Bitcoin's total supply never exceeds 21 million coins. This scarcity is what gives Bitcoin its reputation as digital gold. By limiting the supply, Bitcoin halving ensures that, over time, each Bitcoin becomes more valuable, assuming demand continues to rise. Here's how it works under the hood. Bitcoin's blockchain automatically triggers a halving event when the 210,000th block is mined. That happens roughly every 4 years, not on a fixed date, but at a predictable block height. Miners are the backbone of the Bitcoin network. They validate transactions and keep the system secure. But halving events hit them directly. Each time the reward is reduced, miners earn half as much Bitcoin for the same amount of work. This forces them to become more efficient, upgrade their equipment, or rely more on transaction fees to stay profitable. Some smaller or less efficient miners may shut down entirely, leading to a shift in mining power toward larger, more efficient operations. Each new block is mined about every 10 minutes, and when the halving occurs, the block reward immediately drops by 50%. Now here's the big question: does Bitcoin halving make the price go up? Historically, the answer has been usually yes. After the first halving in 2012, Bitcoin's price jumped from around $12 to over $1,000 within a year. After the second in 2016, it surged again, eventually hitting $20,000 by late 2017. After the third halving in 2020, Bitcoin skyrocketed to over $60,000 by 2021. After the fourth halving in 2024, Bitcoin pumped to an all-time high of $120,000. Why? Because when the supply of new Bitcoins is cut in half, but demand stays strong, scarcity drives prices higher. However, it's important to remember, past performance doesn't guarantee future results. Bitcoin's price is influenced by many factors: market sentiment, adoption, regulation, and global economic conditions. Each halving doesn't just affect Bitcoin, it impacts the entire crypto market. Investor excitement and speculation often spread to other cryptocurrencies, increasing trading volume and volatility. These periods also attract new investors, media coverage, and institutional interest, all of which shape the future of digital finance. Every halving has followed a familiar pattern. Anticipation builds months before the event. Bitcoin's price becomes volatile, and after the halving, long-term growth often follows. This pattern has helped solidify Bitcoin's role as a store of value, a hedge against inflation, and a cornerstone of the cryptocurrency economy. But it's not all smooth sailing. Halving events can put financial pressure on miners, raise network difficulty, and increase transaction fees. They also spark debates about sustainability, since mining still consumes a lot of energy worldwide. Yet, despite these challenges, Bitcoin's decentralized design ensures that halving continues automatically, maintaining predictability, fairness, and transparency in a system that no government or corporation controls. So, what is Bitcoin halving? It's more than just a technical event. It's a built-in system that keeps Bitcoin scarce, valuable, and resilient. a financial heartbeat that pulses every 4 years, shaping the destiny of the world's first decentralized currency. If you enjoyed this breakdown, don't forget to like, share, and subscribe for more powerful educational videos about blockchain, crypto, and financial innovation. Because understanding today's technology means mastering tomorrow's economy. Thanks for watching.